Welcome back again.
Thank you, Jason. It's great to see you again.
So, Dave, I know you've been on a couple times, but I really wanted to talk to you about divorce fraud and the work that you do in that area.
Divorce fraud, unfortunately, is also is very common, and I think it's because of the emotions that are involved, and that causes more and more people to not do the right thing.
So, tell us a little bit about it, because I don't practice any divorce work, but it sounds like it's usually when people are trying to divide up assets that one side's not revealing their true wealth to the other. Is that what's going on?
Well, there's two types of cases that we see the most. There is the case of I'm not going to report all the assets, and they're not reported on the financial statements. Then I don't have to split 50% with you because you don't even know it exists. On the and we've heard every excuse in the book. Oh, I didn't put it down. I'm not an accountant. I forgot about it. I was so distraught from the divorce. So that's really on the asset split and asset search side. The other side that's really common is when there's a business involved, and that's when income's not being reported. So now it's sort of a double whammy. One, what's that business worth? Well, it's a lot less profitable than it used to be, so it's worth a lot less. Now it's less of an asset to split. Oh, and by the way, my income is much less as well. So is my child support. So is my alimony. I got a double whammy here. That's incredibly complex. And again, the excuses, I'm not an accountant. I didn't realize that things weren't reported the right way. Or, oh, did I miss that? Oh, I can't deduct a house as an expense. Oh, sorry about that. We've seen quite a bit, and it's very common, especially because we see emotions run so high. We hear people say, I will pay my attorney before I'll pay you a dime. I don't care what it takes. I'll spend all my money. So it leads people to do bad things in bad situations.
So, I mean, I guess one of the common questions that people will have is like, Dave, these people are married. How does one spouse not know how much something is worth or how much the other person's worth?
I think what happens in so many marriages, and it doesn't matter if it's male or female, that doesn't really have an impact, but it's really more of one person's going to handle, I don't know, they handle a lot more of one thing and another one handles a lot more of the other. Most marriages or people that we see, or at least the cases we're involved in, one person handles the finances. They write the checks. They handle all the income coming in. They pay all the bills. They handle the investments. They meet with the financial advisor. They meet with the accountant. The other person might be dealing with, who knows, the children, the household, college, their own education, their own work or career. But it's not common that both people are dealing with the finances. Even if they both deal with the finances, like, okay, you're going to write the checks, a lot of times they're not dealing both parties with the big picture. So someone's not sitting down and going, so what do we have, Jason? It's you and I. We're two guys that are married. So what do we have for all of our 401ks put together? What do we have for the value of our practices? That's not common that people are sitting down and doing that unless they do estate planning together. So those couples that are doing estate planning, a lot of times are really planning for the future and spending the rest of their life together. A lot of times in divorce, I find there isn't any estate planning and no one's ever sat down and talked about what they actually have accumulated.
Oh my goodness. So, Dave, what was the largest amount that you've seen that one spouse didn't know about that you uncovered?
Largest amount I have seen would have to be in a more recent case where we were actually able to track down the amount of money that was spent per year, found money that was being transferred out of the business. I think it ended up being $4 million in cash. The business was determined that they said the business had zero value. When we were done, we were able to show it was worth $8 million in value. They hired another business valuator on the other side. He came up with like a value of $5 million himself, and that was without adding back everything. By adding back, I mean we found a house was deducted in the business, all kinds of personal expenses that had nothing to do with the business were all deducted to make it look like it was less profitable. Wow. Sort of a business that was generating $2 million of profit a year that they brought home to pay all their bills and accumulate all their wealth. Oh, we're getting divorced? It's only $15,000 of profit now. Yeah, bad economy. Yeah, I don't know what it is. That's exactly what we hear. So wait a minute.
Right.
You have this lifestyle. How did all of a sudden the business take a nosedive?
Right.
It's the divorce. That's what caused the nosedive. And it's really in the record. So again, that's usually the time to give us a call and something that doesn't make any sense. How could, I don't know, your business that makes masks be going down when people are ordering more masks than ever? Right. So when you raise an eyebrow, that's the time to give us a call.
So when is the other times that people should be calling you? Obviously, I have your email and your phone number here. When should people be emailing and calling Dave, and what type of situations is kind of like a perfect situation for you?
Well, in addition to our forensics, when you really look at something and go, that doesn't make any sense, that's the perfect time to call us, especially when you're looking at a tax return. But we also do a significant amount of proactive business tax strategies for people, showing them we use that forensic background to dig into the tax law to show them everything they're not taking advantage of, deductions, credits, elections. It's got huge tax savings that people are missing out on that still gets their business a lot of value, but saves them huge amounts of money that they can use to hire more employees, put away money for retirement, and pay for their kids in college.
Well, fantastic, Dave. Thanks for coming on today, and we hope to have you back again soon.
Well, thank you, Jason, for the opportunity. I appreciate it.